This is Eric Mwada with Mwada.com for April 30th, 2012. Let's take a look at the charts here. Going into the new week, we see that the Nasdaq, after a shallow pullback, it seems like now we've managed to capture the area back above the 50-day moving average, which is exactly what the bulls wanted to see. So that's good. And we see that the Nasdaq is generally staying above this trend line here. So the market still remains actually looking very positive after it recaptured the 50-day moving average on the Nasdaq and also maintaining its upward trend line. So the Nasdaq looks healthy. If you take a look at the Dow Weekly Chart, what is surprising now on a weekly basis is that the Dow is just about to break out on a weekly chart after making a high here of about 12,232. We see that the Dow, after consolidating over the last couple of weeks, is now just about to break out. That's surprising, but we'll see whether it does that or not. But also notice that the 10-week moving average is now about to break out to a 52-week high over here. So that again is a sign of strength on the Dow as we begin the new week. Also take a look at the Nasdaq again. The only thing that I see could be a problem in the market is the monthly charts, as I've been sharing with you. If you take a look at the Nasdaq, for example, on the RSI on the monthly chart, there's a troubling scenario here where the market has been finding it difficult to move above the RSI top lines. Now if we can't move above this line, the top lines here on the RSI, this RSI high connects 2000, late 2007 and early 2011. So if we can't move above this line, the market is going to pull back. But should we break out, then we are going to see a market on a full-fledged rally mode. Again, same scenario with the S&P 500. We see that it's for the month of April, the S&P 500 is just about unchanged. If you take a look at the RSI, you'll notice that if you connect the highs of 2007 and the highs of early 2011, you see that the RSI could be a problem here on the blue line here. If we can't hold that level and continue pulling back, that's going to be a sell signal. On the other hand, if the market breaks out above this line, again we are going to be on a strong upward trend. Very strong rally is going to take place. Now you'll notice that the QQQ is almost recaptured. It had two down weeks here, only two down weeks in 2012, and it's almost back to a fresh weekly closing high. So the QQQs are bouncing back strongly, and we see that they've held precisely on the 10-week moving average and the 13-week moving average right there, which is what you want to see in a bull phase of a stock or a market. Again, if you take a look at QQQ from a daily chart, you'll notice that it bounced nicely back above an upward trending 50-day moving average. So we had a V-shaped recovery back above the 50-day moving average, which is exactly what you want to see whenever a stock is on a rally mode. And generally also, like the Nasdaq, you'll notice that we are maintaining this upward trend in the market. So the market still continues to be pushing high. Again, if you follow the blue arrows here, the blue arrows are going to show you areas on the RSI where the Nasdaq has been finding beginning rallies. The lows of 2011, that arrow connects with this area here on the RSI. There was a low beginning or late November 2011, connects with that area there. This area here connects with this short-term pullback, and so now we are seeing that the market is finding support right there on this line here. This blue line is where the market's been finding support over the last 6-7 months or so. So the market touched that level and bounced to the upside over the last 3-4 days. So again, the market still continues to be strong. Now if you take a look at the banking index, what I want to share here is also the fact that we recaptured the 50-day moving average and are holding firm above the 50-day moving average. That's all the bulls wanted to see, and the market is responding nicely. If you take a look at the IYR, you see that it is at fresh multi-year daily closing highs right there on the IYR, which is a real estate ETF. What we have to watch for here. Now remember, this all began because the IYR over the last couple of months has been bouncing off the 50-day moving average here, and it recaptured the 50-day moving average here almost immediately after it had moved below it. So there's a momentum had been building. The only thing that concerns me here on the IYR, quite frankly, is the fact that we need to see this lower lows on the RSI change. The market's been making lower lows every time it makes a new high. That could be a problem in the market if we see a pullback immediately in the coming days. The IYR from a weekly chart, just to see what the weekly chart looks like, you'll see that the 10-week moving average, 13-week moving average are at fresh, even the 33-week moving average are at fresh multi-year highs, and price is also at a fresh multi-year high. So this could be an area in the market where there's a strong leadership. So the IYR is one of those areas that has been doing well. Also, you'll notice that if you take a look at the IYR from a monthly chart, you see that we are trying to follow through on this monthly breakout, which takes the IYR to levels not seen until all the way back to 2007. So that's an improvement in the chart here. Since 2007, we haven't seen this high, so the IYR continues to do well. The only troubling thing here, just like with the market, S&P 500 and the Dow, is the fact that we have RSI levels. The blue line here could be a resistance level. So if this holds and the market pulls back here, that's gonna be a broad, big time sell signal as far as the IYR is concerned. Right now it's on the line, so we don't know whether it's gonna resist or it's gonna break out. If you take a look at the semiconductor index, the SOX, again we'll notice here that we held this trend line over the last, after this big pullback, we've held the trend line here. This has held, and we also held here. Now we see move to the upside. The SOX is trading between its 50-day moving average and the 50-day moving average and the 200-day moving average. So it's kind of no man's land, but we will see how things shape out in the coming days and weeks. What I wanted to share with you is that the RSI was showing a bounce was imminent. As you can see, the blue arrows here showing on this blue line here, this blue line that I draw here is where it's been bouncing. See that low there, bounced off the blue line there, was a nice low, bounced off the blue line there, which was a nice low, and recently you see it's just bouncing off this blue line. So this was an area where one would have anticipated a bounce, and we got a bounce. Again, the IYR from a monthly chart, troubling thing is that, the SOX, semiconductor index, sorry, on the monthly chart, going back to 2000, you'll see that the RSI has found it difficult to move above this blue line here. This has been an area of resistance. So if that continues being the case, we might have seen the highs for the SOX for some time. Gold continues to be on an uptrend since late 2008 all the way. We've seen this uptrend has been established in gold, even though gold has been on a steep pullback over the last couple of months. Since mid 2011, we are still trading in this triangle here. We are either gonna resolve to the upside, or we are going to break down and start a downtrend. Right now my thinking is gold has been holding steady, and I think gold eventually might creep higher. The reason being that if I take a look at the DZZ, which is 2 times short gold, in other words it goes in opposite direction with gold, you'll notice that this instrument is struggling to hold the 200-day moving average, which suggests gold might be back in play. And also this instrument has been finding it almost impossible to stay above this turquoise line here. it's not been able to hold above that going back many years. So that has always been a troubling sign for this instrument, which has always been bullish for gold. And now if you take a look at the DZZ from a weekly chart, you'll see it's very evident that it doesn't have the strength right now. As you can see, it's held its levels below 50 all the way going back the last 3.5 years. So it hasn't moved above 50 since late 2008. It stayed below 50 on the monthly RSI, and most recently found resistance here and here, which tells me this instrument continues to be under tremendous downside pressure, and gold should be doing well. Again, just to add on to the theme, I noticed that the dollar was just about breaking down here last week, and don't know whether it's going to bounce back, but it seems there's a break on this line here as far as the dollar is concerned. Now let's take a look at TWM, and what we see here is a recurring theme. Now this one is a two times short the Russell 2000, two times short Russell 2000, and you'll notice that the black arrows that I draw here correspond to highs in this stock over going back to October 2011. So this has been an area where the black arrows turn around. For example, they made a high there and the stock went down, another high here, stock went down, and then we've been pulling back every time we hit that black arrow area. What I want to share with you is that the RSI seems to have been telling us each time we had those pullbacks, you see the arrows correspond quite nicely with every pullback. Like that area there was a high, the arrow there, this area here, this area here, and this area here, all finding trouble on this blue line where we've been finding resistance on this level. So again, this suggests to me that the market is still strong, with the ultra short ETF still struggling to find footing. Now I'm going to leave you with one area of the market that seems to be on fire. That's the retail space. If you take a look at the XRT, it's again on a weekly breakout mode. So the market still continues to be strong, surprisingly. So we have to continue playing quality breakouts in quality sectors. This is Eric Muadh with Muadh.com. Good luck, peace, and blessings.